And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is today is Sunday, the 14th of January 2024, and I'm going to be doing the weekly market review. Starting with the DXY, here I'm viewing the weekly time frame chart. As you can see, last week I draw your attention to the weekly encroachment of this premium wick. You can see how price just fell short of it. If you go to your charts, you will see that price was very, very close to it, but it didn't actually touch it. And then we see retracements. You can see that we formed an inside week here where price has a low that is lower than previous week's high, and a low that is higher than previous week's low. So this shows that smart money are accumulating positions at the moment. Now I want to draw your attention to that fair value gap that has been just formed. I'm looking at this in the context of inversion fair value gap. I want to see price trade and close below it, and to be treated as an inversion fair value gap, where we will see some resistance when trading back to it. You can see how price traded to the bearish order block. I also drew your attention to the bearish order block mean threshold of this candle, which is basically the midpoint of this up close candle. So if price would trade above and close above the bearish order block mean threshold, this means that we're going to be seeing a continuation to the upside, potentially taking the relative equal highs right there. However, we didn't see that. We've seen some resistance at the weekly encroachment of this premium wick, and I'm still looking for lower prices. This is side liquidity here, and this is side liquidity here. Going to the daily time frame, you can see now we've been consolidating. You see this candle here, this day, from this high to this low, we've been pretty much trading inside that range. Now, what I would honestly want to see, price running up higher one more time with just the wick, taking the buy side liquidity. Now it can just wick above the encroachment of the weekly encroachment, just to take out the buy stops that would be residing above there, and then trade lower. But I want to see some rally to the upside to trap retail, and to, let's say, engineer more liquidity, more interest in higher prices, and then just trade lower and continue trading lower. But from here it can just trade lower and attack the sell side liquidity. But what I would want to prefer is that price would just wick at least above the weekly encroachment of that premium wick on the weekly time frame, and then trade lower, attacking the sell side liquidity. Also, you can see here that we have a fair value gap. I didn't want to draw it because there will be so many things here on the charts. I want to keep the charts clean. If price would close also below this fair value gap, the daily fair value gap, it will be also treated as an inversion fair value gap. But my main focus here is the weekly inversion fair value gap between this week's high and just recently this week's low. So this would form normally people would look at this as a fair value gap, and when price would trade back to it, they would be going long. But for me, I'm looking at it in another way, because I'm still looking for low prices. We still have the sell side liquidity and this sell side liquidity, so I'm looking at this as an inversion fair value gap. If we close below it, we would be treating it as resistance that would potentially send us lower towards the sell side liquidity. Now I can be wrong, and price can just rally up higher and attack the buy side liquidity, but this is what I want to see from price. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see that we traded and walked inside the weekly fair value gap between this candle's high and this candle's low, and we're recently been trading up higher. Now the moment price trades above this high of this down close candle, this would tell me that we've created a bullish order block, and I'm likely to see price trades up higher, take out this buy side liquidity, and following this buy side liquidity and this buy side liquidity. So I'm still looking for higher prices, and I'm considering this as a bullish order block on the weekly time frame chart. Going to the daily time frame, you can see how price trades. This is the inversion fair value gap on the daily time frame. Price trades above it. Here you can see how it's been treating it as a support. The bodies of the candles are respecting it, and then it's just continuously trading up higher. Last week I mentioned about this potential bearish breaker and how it was a sucker play. You can refer to the last weekly review and you can just watch how I was talking about it, because they want to build interest in the marketplace as shorts, the shorts that they're gonna buy. So if retail are gonna be selling the moment price trades to this bearish breaker as a context, as a pattern, this is a bearish breaker, but as a context it's not a bearish breaker because we're still looking for higher prices. So retail and everyone who's trading patterns are going to be selling into this bearish breaker. They're going to be selling to who? Who's going to buy their shorts? Smart money are going to buy their shorts there, as on a view of a turtle soap, and they're going to be offsetting those positions at the buy stops above this buy side liquidity and the buy side liquidity here on the weekly time frame chart. So I'm still looking for higher prices, and as I mentioned, the weekly bullish order block here on this, I'm considering it and expecting it to show some support when we trade back to it. Also, I want to mention that after we break above this high and we trade above it, we're likely to see price, once price trades above this high, it has formed a bullish breaker. Low, high, lower low, then higher high. This is going to be facilitating this as a bullish breaker. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see the same thing is mentioned here on NQ. Price has been trading and walking inside this fair value gap and the old high, which is a discount PD array, because the old highs is also to be considered discount PD array after we trade above it. So, and it also has facilitated this as a bullish order block, so we're likely to see price trades away from it. Still looking for high prices, mainly the rejection block here and the buy side liquidity, which is the all-time high. I want to draw your attention to something important here, is that I also mentioned this on the EA as well. I'm going to be mentioning it here also on NQ. You can see that some people has viewed this as a bearish unicorn or the bearish breaker, where price there is a bearish breaker inside of a fair value gap, so they will be selling here. Now, without the high time frame context of how you can read the market structure and the market in general, you wouldn't be able to identify that price still has unfinished business up there, mainly the all-time high, the relative equal highs, and the rejection block. So people will be looking for. Now, since we've been trading here, I've been calling out higher prices. You can refer back to mid-September to November. You can see that since we've been trading here, I've mentioned that we have a trend line phantom here, and I want to see price trades and take all of them out. We've seen price consolidated here before taking it out, and then we've seen some strong movements to the upside, attacking this buy side liquidity and reaching to the small fair value gap that is found just below the rejection block. And we traded to it, and now we have retracement. After the retracement, we worked inside the fair value gap and the old high here, and now what I'm expecting is a continuation to the upside, attacking this buy side liquidity and rejection block and the buy side liquidity. You can see that price. Many people, if they don't have the context and the experience to read the market and understand what it's likely to be reaching for, they're going to be trading patterns, and one of the patterns that they're going to be trading is the bearish breaker. You have a high, low, higher high, lower low. You're going to be looking at this as a turn in the market where price has enough of liquidity and wants to reverse, but it's not really the case because we still have unfinished business up there. So we're likely to post some bearish ideas for people who are trading patterns, so we can build interest in the marketplace on the form of shorts. So many of people are going to be shorting here once we traded to the bearish breaker. Many of them, and you can see the wicks, like price opened, traded all the way lower, and then traded up higher. Even here, like you can see how price is just been getting sold here, but who's buying their shorts? Smart money are buying their shorts. They're continuously buying their shorts, and they're gonna offset those shorts above this high and the other high is the rejection block and the buy side liquidity, which is relative equal highs. After we trade above this high, we have formed a bullish breaker, which is a low, high, lower low, which took the sell side liquidity and reached to and filled some of the fair value gap and to the, you can see the bullish order block here, and then to be trading up higher, taking out this high. People are gonna be pretty much getting wrecked, because the people who short here, they will have their stop loss just above this high. Now, people who traded after we broke this high, people are going to be buying, thinking that this is a bullish order block. They're going to be buying this and setting their stop loss just below this low, which is the sell stops. The market has traded lower. When it traded lower, many people has, the sell stops that people were long, they have been out of the marketplace right there, and the people who sold on weakness are also caught right there. They have their stop loss above this high, so when we trade above this high, they're also trapped because they have their stop loss above this high on a form of a buy stop, so they're going to be out of the marketplace. By this way, both parties in the marketplace, the people who longed in the beginning and the people who shorted, are going to be out of the marketplace. And this move is going to be primarily for smart money to be part of. So that's going to be pretty much it for NQ. I'm still looking for higher prices. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see we have the all-time high prices just consolidating just below it to build interest in the marketplace for people to short, believing that this is a old high and it's going to be showing some resistance. But it's not really the case, because we're going to be running this as if there is no tomorrow. Anyway, we have a fair value gap here. Price, it hasn't been trading to it lately. You can see on the daily time frame, we've been in a tight range consolidation. Now, what I would like to see is price trading lower, taking out these relative equal lows with just the wicks, getting those people who are trying to short into the marketplace. And when it retraces, people are going to be selling because they're thinking that this is support and into resistance. They're going to have their buy stops above this high and this high. And then we're going to be running up higher, taking all of the buy stops residing above this highs and the all-time high, which is on the weekly time frame. This is buy side liquidity, which is the all-time high. So this is what I want to see in price. I want to see price first trades lower, tag the relative equal lows, and then run up higher, reach to the relative equal highs and the all-time high buy side liquidity. Now it can just run for the all-time high buy side liquidity if it has accumulated enough positions, and if it doesn't want to, let's say, accumulate more or engineer more interest in the marketplace on the form of the sell stops here. But if it has enough liquidity and it doesn't need to accumulate any interest in the marketplace, it can just run to the buy side liquidity. So that's going to be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see that last week has just been trading inside the previous week's range. So this will be considered as an inside week candle, where the high is lower than previous week's high and the low is higher than previous week's low. So this shows that smart money are accumulating positions, as has been showed and explained in the DXY at the beginning of this weekly review. You can rewind the video and watch it. As a result, we formed this fair value gap. I'm looking at this as an inversion fair value gap. Before we trade above this high, I'm looking at this as an inversion fair value gap. I'm not looking at this as fair value gap that you would be going short at. I'm looking at this fair value gap to support the ideas of going long and attack the buy side liquidity. This is what I'm looking at it. We have this buy side liquidity and this buy side liquidity. So I'm still looking for high prices running up higher toward the buy side liquidity. Going to the daily time frame, you can see how price has just been trading. You can see the bodies are just respecting the inversion fair value gap right there, which was treated in the past as drawn liquidity right there. and now it has been treated as support. The bodies are respecting it, and it's slowly running up higher. You can see that we've formed a relative equal highs here. We're likely to see price just rally up through the relative equal highs and close above the inversion fair value gap. I want to see daily closure above this inversion fair value gap. I want to see it then later on being treated as support that can potentially send price higher to the buy side liquidity, and the fair value gap that is just inside this buy side liquidity. You can see that we have relative equal highs here also, and the fair value gap. So this is an area that I'll be looking at, and it's just above this high. And ultimately, you would say the external range liquidity is this buy side liquidity that I'm aiming at. So that's gonna be pretty much it for Euro USD. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see that we still have the buy side liquidity. I'm still looking for higher prices. Price didn't reach the weekly constant of this discount wick, so it was very close to it, but it didn't reach to it, and it traded up higher and took previous week's high. I'm still looking for this buy side liquidity, and this fair value gap, which is shown on the daily time frame, and we have the buy side liquidity up there. Going to the daily time frame, you can see the buy side liquidity and the fair value gap that I've mentioned. This is a refined fair value gap. The fair value gap would be from this candle's low to this candle's high, but because this candle here, it has repriced almost approximately the half of this fair value gap, so it would be a refined fair value gap between this candle's low and this candle's high that filled some of that fair value gap. And we have the buy side liquidity, which is the external range liquidity. So currently, why did we see this type of consolidation? Because if you measure from this high to this low, we're pretty much at the equilibrium of that dealing range. So it's absolutely normal and to be expected for price to be consolidating at the equilibrium. And for me, what I want to see is pretty much higher prices attacking the buy side liquidity here, and the rest of the buy side liquidity here. So I'm still looking for higher prices. This is a potential bullish order block. If price wants to be treating it as a bullish order block, that can potentially send price higher above to the buy side liquidity. So that's gonna be pretty much it. Last week we had CPI. Price was on Thursday. You can see how price just been showing erratic price action, and you can compare it and study it on the other asset classes that I've shared with you. That's going to be pretty much it for this weekly review. I hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.